Snowflake stock was down 16.16% as of this recording today. Now, in this video, I'm going to answer if this is a buying opportunity for investors, if investors should buy the dip in Snowflake stock. Well, the reason Snowflake stock was down by 16% was because it reported fiscal 2024 first quarter earnings results that disappointed stock market investors. So, in answering the question of is this a buying opportunity for Snowflake stock, I'm going to review the big picture highlights from Snowflake's latest earnings, and then at the end of the video, I'll answer if it's a buy or not. So total revenue in the quarter increased by 48% to 624 million. However, its loss per share on the bottom line worsened to 70 cents from 53 cents in the same quarter. Now, typically, I like to see companies demonstrate economies in scale when they grow their revenue. I don't mind if they're losing money on the bottom line, but I like to see the losses narrow as they grow the revenue. Meaning if they lost 53 cents last year and revenue jumped, I'd like to see the loss decrease from 53 cents to something lower. That shows me progress towards profitability. Snowflake moved in the opposite direction. Revenue increased, but it just made the company lose more money on the bottom line. Now, there is a asterisk to that. I'll talk about it towards the end of the video, so stay tuned. Snowflake reported 151% net revenue retention. However, that's 4 straight quarters of decline from 174% in Q1 of 2023. Its net revenue retention has been decreasing 4 in a row quarters. Net revenue retention is important because any number over 100% means that existing customers are spending more money with you this year than they did in the previous year. To me, that demonstrates you're delivering good value. If your clients are spending more money with you as time goes on, it demonstrates you're delivering them good value. Otherwise, they wouldn't increase their spending with you, right? They would decrease or move elsewhere. So that's a good sign. RPO of 3.4 billion was down from 3.66 billion in the previous quarter. RPO stands for remaining performance obligations, and the way Snowflake bills its customers is quite unique in, well, it's not quite unique, but many companies like Snowflake bill customers in this same way, which is important to remember. When they sign a client and let's say they get a deal for $1 million, Snowflake doesn't recognize that $1 million deal immediately as $1 million in revenue. That goes on its books, and Snowflake then recognizes it as revenue as it performs the obligation. So let's say it was a $1 million deal for 10 months of consumption of Snowflake services. Snowflake would then recognize that $1 million over 10 months as 100,000 each month over the next 10 months in revenue. So RPO is important because it indicates what Snowflake's revenue are likely going to be like over the next 12, 24, 36 months. And with RPO decreasing, that means the total remaining contracts that it has decreased from the previous quarter. So that was not a great sign. Still, Snowflake boasts 373 customers who spend over $1 million with them annually. That was up from just 207 million year over year. That was a good sign that they're gaining more traction with high value customers. Overall, Snowflake boasts 8,167 customers. That was up by 29% year over year. What this showed me is Snowflake's lower value customers or lower scale, smaller size businesses are decreasing spending, are having more difficulty than its higher revenue clients, right? So if you're dealing with enterprises on a smaller scale, those enterprises are cutting back spending, being more cautious, more so than Snowflake's higher size, bigger sized customers. And you could see that in the difference between customer growth in the rate of customer growth. Excuse me. Snowflake's cash flow from operations increased to 299 million. That was up from 184 million in the same quarter last year. This is what I was talking about earlier when I said there's an asterisk with the loss per share on the bottom line, because the company did an excellent job increasing its cash flow from operations. The big difference between cash flow from operations and the net profit on the bottom line, or the loss per share, is stock-based compensation. Snowflake uses that to pay its employees instead of paying them cash. And so it makes its cash flow from operations look better than its loss on the bottom line. Although down the line, this could hurt shareholders as Snowflake dilutes shareholders, meaning there's going to be more shares outstanding. So that's something to balance between cash flow from operations and the loss per share. Snowflake is forecasting 2024 revenue of 2.6 billion, which would be an increase from 1.94 billion in 2023, although that increase would be moderate. It would be a slowdown from the 48% revenue growth in the first quarter, and certainly a slowdown from previous year's revenue growth. So Snowflake is forecasting a significant deceleration in revenue growth in 2024, and that can partly explain why the stock price was down so much following the earnings announcement. Now, to answer the question, is this a buying opportunity or is Snowflake stock a buy right now? I would say it's on the borderline. Now, coming into these earnings results, I had Snowflake stock as recommended as a hold. After the earnings results, I have it closer to the borderline. I wouldn't be surprised if over the next week or two, I change that recommendation to a buy. And if that's strongly dependent on if the stock price continues to come down further. That there's two factors to why I'm more favorable on Snowflake stock. Number one, the huge boost in cash flow from operations, and number two, the big decrease in the stock price, making the valuation on a price to free cash flow basis more favorable. Although it is still expensive, and that's why I'm not quite there yet on recommending it as a buy. So I have it right on the borderline, not quite a buy, between a buy and a hold right now. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.